What is an owner's equity statement? An owner's equity statement, also known as a statement of changes in owner's equity or statement of retained earnings, is a financial document that summarizes the changes in the owner's equity of a business over a specific accounting period. This statement provides insights into how various factors such as profits, losses, investments, and withdrawals have affected the overall equity held by the owner. Importance of owner's equity statement. The owner's equity statement serves several purposes. It allows owners and stakeholders to evaluate business performance over time. It aids potential investors in assessing financial health before making investment decisions. Lenders review this statement to determine creditworthiness and assess risk. Management uses it for internal planning regarding reinvestment strategies or distributions to owners. Key components of an owner's equity statement. Beginning owner's equity. This represents the equity amount at the start of the accounting period, reflecting the owner's interest in the business after all liabilities have been subtracted from total assets. Contributed capital. This includes any additional investments made by the owner during the accounting period, which increases owner's equity. Net income or loss. The profit or loss of the business after all expenses are deducted from revenues. Net income contributes positively to owner's equity. A net loss contributes negatively to owner's equity. Owner's withdrawals, drawings or dividends. Any amounts taken out of the business by the owner for personal drawing use or paid to stockholders as dividends during the accounting period reduce owner's equity. Ending owner's equity. This is calculated by taking beginning owner's equity, adding contributed capital and net income, and subtracting any withdrawals or losses incurred during the period. The formula to calculate ending owner's equity can be summarized as follows. Ending owner's equity equals beginning owner's equity plus contributed capital plus net income minus owner's withdrawals, draws or dividends. In summary, an owner's equity statement is crucial for understanding how various transactions affect an owner's stake in a business, providing transparency and insight into financial performance over a specified time frame.